In the high-stakes battlefield of global economics, two superpowers stand locked in a silent war, one that isn't fought with missiles, but with tariffs, sanctions, and economic leverage. The United States and China, the world's largest economies, are engaged in a relentless trade war, one that could send shockwaves through the global financial system. It started as a battle over unfair trade practices and intellectual property theft, but as tensions escalated, supply chains fractured, stock markets trembled, and industries worldwide braced for impact. What began as a political standoff is now a ticking time bomb, threatening to collapse the very foundation of global commerce. How did this trade war begin? Who truly holds the upper hand? And most importantly, could this economic conflict trigger a financial meltdown on a scale we've never seen before? This is the story of China versus America, the trade war that could collapse the global economy. Chapter 1: The Economic Cold War: How We Got Here. For decades, the world watched as China and the United States built a relationship that reshaped global trade. Factories in Shenzhen powered American industries, while Silicon Valley technology fueled China's rise. It was a delicate balance, one that made both nations richer but also dangerously dependent on one another. But beneath the surface, tensions were brewing. Was this an alliance of convenience or a competition in disguise? The roots of this conflict stretch back to the dawn of globalization. In the late 20th century, China emerged as the world's factory, offering cheap labor and aggressive manufacturing. American companies, eager for lower costs, shifted production overseas, fueling China's meteoric rise. But as China's economy grew, so did the cracks in this fragile partnership. Trade imbalances, intellectual property theft, and political distrust set the stage for an inevitable showdown. By the 21st century, China was no longer just a manufacturing hub, it was a superpower, challenging the U.S. for dominance. Washington accused Beijing of currency manipulation, state-sponsored espionage, and unfair trade practices. Beijing, in turn, saw the U.S. as a declining empire, desperate to maintain control. Then came the tariffs. In 2018, the United States fired the first shot, imposing billions in tariffs on Chinese goods. China retaliated instantly. The battle escalated into an all-out economic war, one fought not with bullets but with sanctions, blacklists, and financial warfare. The result? A fractured global economy, rising inflation, and the threat of a full-blown financial collapse. But is this just another trade dispute? Or the beginning of something far more dangerous? To understand what's at stake, we need to go deeper into the industries, the politics, and the power moves that could decide the fate of the global economy. Chapter 2: Factories, Finance, and Power: The Battle for Global Dominance. For decades, the world has watched as two giants took vastly different paths to power. China, the factory of the world, built an empire on mass production, relentless efficiency, and an unshakable grip on global supply chains. Meanwhile, America cemented itself as the financial capital of the world, controlling investment flows, currency markets, and the very institutions that dictate economic policy. But in the escalating trade war, these two pillars of dominance have both become weapons and vulnerabilities. Walk into any store, pick up a product, and chances are it was made in China. From iPhones to pharmaceuticals, from steel to semiconductors, China produces nearly 30% of the world's goods. It's a system built on low labor costs, government subsidies, and a scale of production no nation can rival. But this dominance comes at a price. China is deeply dependent on exports, and when trade barriers rise, its economic engine stutters. Manufacturing might have built China's wealth, but in a war of economics, a closed-off supply chain could be its greatest weakness. While China floods the world with products, America controls the money that buys them. The U.S. dollar isn't just currency, it's a weapon. 80% of global trade transactions are conducted in dollars, and American banks hold the keys to the international financial system. Washington has used this power ruthlessly, imposing sanctions, restricting Chinese companies from accessing U.S. capital, and even cutting off China's tech giants from semiconductor supply chains. But this strategy has its own risks. What happens if China retaliates by dumping U.S. debt or pushing for a new global reserve currency? At its core, this trade war isn't just about tariffs or policies. It's about two nations fighting for the future, one built on factories, the other on finance. If China can break free from Western financial control, and if America can reclaim its dominance in manufacturing, the balance of power in the world will shift forever. But here's the real question. Will this battle for dominance end in economic supremacy or mutual destruction? Chapter 3: Tech Warfare, AI, Chips, and the Race for Innovation. For centuries, wars were fought with armies. Today, the battlefield has shifted from land, sea, and air to cyberspace and silicon chips. In the ongoing trade war between the United States and China, the most critical front isn't just in factories or shipping ports, it's in artificial intelligence, semiconductors, and cybersecurity. The winner of this technological arms race won't just dominate the economy, they'll control the future. Semiconductors, the tiny but powerful microchips inside everything from smartphones to fighter jets, are the lifeblood of modern technology. China, the world's largest consumer of these chips, is desperately trying to reduce its reliance on U.S. and Western suppliers, while America fights to maintain its technological edge. Whoever controls semiconductors controls innovation and, by extension, global power. When the U.S. imposed crippling sanctions on China's tech giants like Huawei and restricted access to advanced chip manufacturing, it wasn't just an economic decision, it was an act of war. The message was clear: China's rise in AI and quantum computing must be slowed at all costs. From self-driving cars to advanced military systems, artificial intelligence is the next frontier of global dominance. The US has long been the leader in AI research, but China, fueled by vast amounts of data and government-backed funding, is catching up fast. Beijing's ambitious Made in China 2025 plan aims to surpass the West in AI, robotics, and biotech, sending alarm bells ringing in Washington. To counter this, the U.S. has tightened AI-related export controls, banned Chinese companies from acquiring American tech, and pushed allies to cut China out of semiconductor supply chains. But China is responding in kind, accelerating its own chip production, hacking foreign networks for intellectual property, and even threatening to restrict rare earth minerals crucial for chip making. Beyond trade tariffs and supply chains, a digital war is unfolding in the shadows. Chinese and American intelligence agencies are locked in a constant battle of cyber espionage, targeting corporate secrets, government infrastructure, and even financial markets. Data is the new currency of power, and both nations are racing to secure it by any means necessary. As tensions escalate, the world is watching. If China succeeds in achieving self-sufficiency in chip production and AI, it could reshape the balance of power forever. If the US manages to keep China dependent on Western technology, it could retain its dominance, but at what cost? This isn't just a trade war. It's a technological war for global supremacy, and the stakes have never been higher. Chapter 4: The Weaponization of Money, the Dollar versus the UN. Money isn't just a medium of exchange, it's a weapon. And in the escalating economic war between the United States and China, currency supremacy is the ultimate battlefield. For decades, the US dollar has reigned supreme, controlling global trade, international reserves, and the financial systems that keep economies running. It's more than just a currency, it's power. But China has been working relentlessly to challenge that dominance. With the rise of the UN, Beijing is pushing a strategy that could shake the foundations of the global financial order: de-dollarization. At the heart of this battle lies a critical question: what happens when the world stops depending on the US dollar? China has been securing trade agreements in its own currency, forming alliances with countries looking to move away from dollar dependency. The Belt and Road Initiative, oil deals settled in yuan, and digital currency innovations, each move is a calculated step toward dethroning the dollar. And Washington knows what's at stake. The US won't give up its economic dominance without a fight. Through sanctions, financial restrictions, and the influence of institutions like the IMF and World Bank, America has long used the dollar as a tool of control. But with rising inflation, economic instability, and a growing list of nations seeking alternatives, could the world be witnessing the decline of the dollar's empire? This is more than just a shift in currency, it's a war for global influence. If the UN gains traction, If China successfully leads a new financial order, then the balance of power will shift forever. Who will win this battle for economic supremacy? And what will be the cost for the rest of the world? Chapter 5. The Endgame. Who will control the future? The trade war between the United States and China has reshaped the global economy, disrupting industries, shifting alliances, and testing the resilience of two economic superpowers. But as the dust settles, a far bigger question looms. Who will emerge victorious? And what does victory even look like in a war where no one truly wins? For decades, the United States has been the undisputed leader of the global economy. The dollar remains the world's reserve currency. Wall Street dictates financial trends, and Silicon Valley controls the most advanced technology. The U.S. government has injected trillions to counteract the economic impact of tariffs and supply chain disruptions. Can this level of spending be sustained? Manufacturing revival or illusion? While reshoring efforts are bringing some production back, American companies still rely heavily on Chinese components. A new alliance strategy. The U.S. is tightening economic ties with allies like India, Japan, and the EU. But will these partnerships be enough to offset China's influence? Unlike the United States, China plays by different rules. Its government controls key industries, plans decades ahead, and isn't bound by short election cycles. As it pushes forward with Belt and Road expansion, digital currency experiments, and AI-driven economic policies, China aims to outlast rather than outfight its opponent. Yuan versus dollar. China is aggressively pushing for the yuan to challenge the US dollar's dominance in global trade. If successful, this could shift the balance of economic power. The US depends on China for critical minerals used in semiconductors and batteries. As China strengthens its grip on these industries, will the US find an alternative before it's too late? While China's command economy allows for long-term planning, internal challenges such as real estate debt, youth unemployment, and global skepticism could slow its rise. As Washington and Beijing clash, other nations are forced to choose sides or attempt to navigate a path between the two. The EU remains a key economic player, but tensions with both the US and China leave it in a difficult position. The rise of new players. India, Brazil, and Southeast Asia are capitalizing on the trade war by attracting investments from companies looking for alternatives to China. If the world continues to divide into separate economic blocs, will global trade as we know it collapse? Unlike military battles, economic wars don't end with a surrender. They end with exhaustion, adaptation, or reinvention. The US and China may continue the struggle for decades, each adjusting its strategies to maintain leverage. But one thing is certain. Whoever controls the future won't just dominate trade. They'll shape the very foundation of how the world does business, innovates, and wields power in the 21st century. The question is, will this battle push the world toward progress or trigger the collapse of a system too big to fail?